In Europe, stocks traded higher in early trade as investor sentiment improved on the back of easing U.S.-Iran tensions. For more, let's bring in Chelsea now. Hello, Chelsea. Good afternoon. Well, global stocks are rallying again as the Iran-U.S. tensions fade. Could European stocks be heading for new records soon?
We've already really seen that achieved today already. So the Euro stocks, which is a pan-European index, hit a record high earlier. And here in Frankfurt, the DAX is really within spitting distance of a record. It's about 0.5% from its all-time record. And that's pretty notable because the DAX hasn't really hit a record high in about 2 years. So it's sort of been left out of all these record highs we've seen across Europe and also in the United States. So I think investors are really trying to put the Iran tensions that we've seen over the past couple of days behind them and focus on the broader fundamental outlook for stocks going forward. One of the key drivers is, of course, going to be what happens next between China and the U.S. on trade negotiations. So earlier today, China confirmed that it's going to be in D.C. next week to sign the Phase 1 trade pact. So I think that's really helping support market sentiment today as well.
New forecasts from the World Bank and, of course, disappointing German export data are adding to concerns about the European economy. What's behind the growing gloom?
So there are a couple different factors, but really the big driver is Germany. Germany's weakness is really weighing on the broader European outlook here. So the World Bank cut its forecast for the euro economy to only forecast growth of 1% for this year. That's down about 0.4 percentage points from its last forecast. And they're really pointing to the weakness in the industrial sector across Europe, but especially here in Germany, where exporters are really struggling with the China-U.S. trade tensions, which have hurt sales to both markets. The tensions over Brexit have also really reduced exports. And this comes as we've seen a lot of mixed data out of the manufacturing sector here in Germany just this week. So today there was a export data release, and that showed that exports were down about 3% in November. That's a pretty steep drop. And we've also seen weak production and industrial order data out this week as well. So there had been some hope that the German economy was going to be picking up, that had really bottomed out. But this data this week really has created concerns that Germany is still going to be stuck in this factory slowdown for quite a while, which would have broader impacts for the Eurozone.
A bit of a corporate news. Their electric vehicle maker Tesla stock is surging, putting it close to overtaking auto giant Volkswagen to be the world's second largest automaker. Will this happen soon?
It certainly could. Tesla has a market value now of about $89 billion. Volkswagen is just a little bit higher. It's about $98 billion today. So Tesla stock would have to rise about 10% to put it in the same area as Volkswagen. Yesterday, its stock rose more than 4%, so that's definitely not out of the realm of possibility. But at the same time, Volkswagen is a much bigger company in terms of how many autos it sells. Volkswagen sells more than 10 million vehicles a year. In 2018, Tesla had only about 250,000 deliveries. So these are very differently sized companies. But what really unites them, what's really going to be driving both stocks going forward, is how they sort of capitalize on the demand for electric vehicles. Obviously, Tesla is known for being a pioneer in electric vehicles, and they've really been seeing a lot of growth because of that, even here in Europe as well, but also in Asia. But Volkswagen is also really trying to increase its dominance in that market as well, and they're going to be rolling out a lot of competitors to Tesla's vehicles over the next few years. So I think we may see them battling it out for this number 2 spot in the global market. But what's really going to determine this is how well they capitalize on the trend of electric vehicle adoption.
All right, thank you, Chelsea, for updating us. Enjoy the rest of the day.